Hey guys and girls, it's Burry here. Hopefully everyone is having an awesome Tuesday. Just thought I'd hop onto a live, give you guys a little video of what is happening out there, look at the news, look at what's happening in the financial market, and get into the real fun stuff that's out there. So with it, for some reason, it looks very dark here, and my hair looks very white for some strange reason. I don't know if you can see that on your camera, but I'm just in Port Douglas. It's been very sunny the last few days, which is great, and just on the rooftop of the place where I'm staying, and yeah, lots of cool stuff to share with you guys. Just as everyone was hopping online, I'm a little bit tired. I was up at like 5 a.m. this morning, and I hopped in the car with one of my mates, a broker that I've been dealing with. When I say a broker, I mean like a commercial sort of broker, which I've been buying big sort of deals with the last few years, and went for a drive through Cape Tribulation, through the Daintree, out to Cape York, inspected a few different things. So literally been driving for 12 hours today, and took my big Chevy truck through a rainforest, and gave it a good workout. But it's a bit of a hike today. So on that note, I'll keep tonight's live to probably an hour or a little bit less, and got some things to talk about. I can hear there's some noises outside from other people's villas and stuff like that, so you might hear random noises from every now and then, but just the heads up on that front. But yeah, today I want to talk about the cost of living crisis, what it means for a lot of people, what does it mean to you with your life, what does it mean for the opportunities that are out there, what can you do to protect yourself, and how can you take advantage of the opportunity that's out there. So one thing, I've got here about 10 articles to share. I've got an inflation chart, which is amazing. I'm going to share it with you. Just something occurred to me the other day, which I had not thought about beforehand. This is the first time I'm going to be sharing that, and it is very fun when I share my thoughts on the curvature of inflation. So, yeah, let's just jump straight into it. So, the first one, I'm just going to open up this in full screen. Is a cost of living chart. I've just got my computer here with the ring light, trusty ring light with my phone. If we have a look here, you can see the cost of living and inflation. That is the chart of inflation there. That is the real cost of it. And as we can see, it is going up higher and higher and higher. We're having a runaway. This is called a hockey stick, for those of you that don't follow charts on different things. This is called a hockey stick. And that hockey stick is going to, you know, when you have a hockey stick, it just flies off the charts. So what this is just from a news.com article talking about inflation, and it shows from 1950 there was like the cost, something that cost $4 in 1960 cost $130 there. Yeah, so if it was $4 in 1960, it's now $130. So one thing, it says the red line will not fall, right? So if inflation's gone up at a certain level, let's say that your favorite yogurt was $5 and it's now $6.50. When they tackle inflation, doesn't mean that the yogurt's going to go back down to $5. It means that the yogurt's now $6.50. And when I read this article, I thought about something very, very crucial that no one has talked about, right? No one has talked about out there. If something used to cost $50, just to say, fine, tell me something that cost $50 a year ago. If someone can shout out and just, you know, give me a bit of a help along here. If something cost $50 2 years ago, 3 years ago, and now it costs $100. Let's just use that for an example, right? If you were giving a 3% inflation, right? A 3%, this is how we get into hyperinflation and runaway inflation, right? If something costs $50 and you had 3% inflation, which they want to try and keep inflation under 3%, which they say they did forever, but 3% inflation of $50 means that that thing has gone up $1.50 per year, right? It's gone up $1.50 on that thing. So it's now $50 to $51.50. If inflation is now 7%, right? Right? This is where the penny will drop for everyone. If inflation is now 7%, which is where they say it's at, but it's probably higher than that, 7% inflation based on $100, that's now $7 increased. Right? $7 increased based on something that used to be $50 is now like 15%, right? So the compounding effect of inflation, it goes like this and then it goes up higher and higher and higher when no second job's going to pay for that to be fixed for you. So we're going to enter the next phase where we're going to have a crash at some point, wherever that is. I think we're in the middle of it. I'll go through some news articles today which sort of back up that belief and view and what I've been saying for the last year. Once we go through that crash and the deck of cards splits apart, just like February 2020, I don't mean a crash like GFC. It would be bigger than the GFC if they really let it crash, but it would be more like February 2020, where it's just a blip in the ocean and they just print through it. That next time that happens, we're going to a hyperinflation. So just remembering, if we go a 3% increase of inflation on $50, that's $1.50. So $50 goes to $51.50. But now that everything's been compounded so much and it's gone from $50 to $100, and inflation is now 7% on top of that $100, that means that $100 is now $107. That's $7 over what used to be $50 is more like 15%. That's what I just said just then. So just understand that when you compound that, next year's 7%, or 3%, let's say it goes back down to 3%, it's still going to be compounding on the $107 now for inflation. So the cost of living is not going to get cheaper, folks. It's not going to get cheaper. You've got two things to do. You've got to reduce your expenses or increase your cash flow. But if you try and decrease your expenses, you can't really control that. So the one thing you can control is increasing your cash flow. And the reason why I'm the happiest motherfucker that's out there on Facebook and YouTube and social media and Instagram is because I see the value of that. I saw that a long time beforehand. The cash is trash. Who cares about the cash, right? It's about having the assets and having the cash flow. Yes, the expenses are going up, but yes, the cash flow is coming through. So one thing that I have done just recently, as I said, last fortnight I was in the Gold Coast today. I'm in Port Douglas. I've been travelling around the country, done about 7,000 kilometres in the last two weeks. One thing that I have realised is that there is so many cars on the road. There's so many people on the road. There's so many people travelling. I went to Townsville the other day and I had to stop in there. I need to stop in there. And when I got to Townsville, there was no rooms available, right? I called like 20, 30 places, right? It was either 4 hours before Townsville, 4 hours after Townsville that you could stay. There's nothing really around that Townsville location, which was very annoying. But it made me realise, like, shit, the markets are very, very hot. There's a lot of activity out there. There's a lot of people out there moving around, doing certain things. There's still a lot of cash out there, a lot of capital floating around in this system because it's all being printed from nowhere, right? So yeah, it's just interesting to see what's happening out there. So here's my first article here, which is from news.com. I don't have any printouts, so I've really just got my do I have any things here that's a bit weird? No, you can't see anything on my top of my thing, but just reading the article, so I don't have anything to throw around comically today. Yes, Rat's Tail still here. Haven't lost the weight. I will hopefully lose it soon. I've been too busy driving than being able to do that. But goes here, hollow victory. Why beating inflation will not fix Australia's cost of living crisis. Inflation is squeezing Aussie households hard, and it turns out the situation may even be more grim than most of us probably realise. Goes on to back up the story I was just sharing. Here's the bad news: inflation, even when economists tell us it is finished, it still has going to hit us bad, really, really bad. Imagine inflation as a tree in your front yard, getting bigger and bigger and bigger and casting shadows, making your house dark and dropping leaves everywhere. When the inflation is defeated, the tree does not get cut down. It will still be there, large and looming. It just stops growing as fast, right? That's very fitting because I went through to, I went out to the Daintree today and I was like, shit, we need to cover the canopy of some trees because it's too big. But looking at, certain things like, who remembers $1 milk, $1 bread, right? I don't know what these things are worth, but, expect to see the petrol in your car. You don't see it at $1.50 anymore, but you do see it around $2.40. I was on the phone to my mum, and she was with a friend the other day, and they were chatting, and they're like $2.41 and $2.42, and looking at those things, right? Like, I didn't care. I don't even know what the price of petrol really is. I don't look at it. But these things are getting higher and higher, and most people are there working out, how can I cut the costs? Well, you can't bring those things back to where they used to be. You can't go back to the good old days when it comes to the price of things, right? We're stuck where we are, and it's going to get a lot worse, but it's how do you increase your position? How do you increase your cash flow? If you've only got one opportunity to increase your cash flow, sure, wages will jump up a bit. A lot of people needing to get help from the government, get help from food, get help from charities out there. There's a lot of help that's required. A lot of people are getting help from getting themselves into more debt to just get through life. 10 years ago, people owned their cars. They didn't have car loans. 10 years ago, there wasn't a thing called afterpay, buy now, pay later, all that sort of stuff. So, the more that the inflation kicks in, the less better your lifestyle's going to be. Lifestyle's going to get a lot worse. And I don't want to be the Debbie Downer, but for me, recently, I was saying about Townsville a moment ago, I've been putting up the room rates on all my motels. So if I look at 20 motels and put up the rents at, say, 20 rooms by just $10, that's 20 times 10, that's $200, times it by 20, that's $4,000 a day extra income just by tweaking something in my business model and whatnot. And some of them I'm pushing up much higher than that, and the market's supporting of it, which is good. But what things do you have? Do you have rooms that you can rent out, via a motel, or do you have weekly rentals in your investment properties? Do you have a business that you can increase your prices on? Is there certain things that you can come back on? Is there things that you can change in your business model if you do have a business? Do you need such a big office now? Is everyone working in the office, etc., etc.? So, just things to look at. If something was $10 before and inflation is 6%, then it now costs $10.60. If inflation next year is 9% on top of the 6% this year, it goes up from $10.60 to $11.55, right? So that's really 15% over a period of 2 years. We've had 3 years of high inflation, right? This is the compounding effect where we're getting into now. The same thing goes, right? If you have debt, that debt becomes easier. Someone just said here, products in your business. If you have an average of $2 increase in the product, over 500 products, there's $1,000. So it's like, what things can you increase in your life? What things can you decrease? But this isn't going to change, right? Like, this is a very big issue and a big situation. If you have debt which is fixed in old currency, when I say fixed, I don't mean the interest rate is fixed. I mean the amount of debt. If you've got $100,000 debt, well, then that's still $100,000 debt in 10 years' time. Let me tell you, $100,000 in debt 20 years ago, for me, I thought I was going bankrupt, right? I literally thought of $100,000 worth of debt, wow, right? Every day I'll spend more than $100,000 just on bills and businesses and all different shit, right? But it's like, the size of it, like, what's $100,000 20 years ago to $100,000 now? What's $100,000 going to be in another 20 years? Like, people are driving around and literally they're buying a new Ford or a new Toyota or a new Mitsubishi, and they're spending $100,000 on a car, right? On a car, and they're getting a loan for it, right? So the debt, when you're buying an asset, the debt gets devalued, right? But the asset is getting increased, so the asset value is increasing. I'm seeing massive increases in a lot of locations. I did some videos on this on my trip, and I'm trying to make lots of video content for the next couple of months, so you guys can see nice little videos every couple of days from me, just on things that I'm seeing out there. And there's a lot of markets where the prices have gone up from $150,000 a year ago to $200,000 at the start of this year, and now they're at $250,000, and that's just inflation, the cost of rebuilding. I was looking at some of my motels this last week, and I've been trying to buy more motels, right? And for me to go from 30 to 50 motels, I'm going to have to buy some more. And then when I look at those motels, I'm thinking, okay, what's the key rate, right? So key rate is per unit, basically, in these things. And like I bought one last year, and I paid $21,000 per unit. They're only 10 years old, right? Yeah, they're real things and all that. So for me to go and buy these things now, I'm going to have to spend like 100 to 150 grand a key, and I don't feel the confidence of spending 150 grand per unit. But it's just not my game. So I was sitting there today, and as I was looking at some of my motels, I'm like, I'm going to renovate this one, I'm going to renovate that one, I'm going to renovate this one, and there's 3 of them which I'm thinking of putting in another 20 units into, and I'm like, I can double down on that. If I can get the build and the construction of them done, I can be spending 50 grand a unit and adding value at 100% return per annum on that. So I'm looking at like, how can I add value on my assets? How can I utilize the things that are around me? I've got trades that are traveling all around the country at the moment doing renos, and I can't keep enough trades at the moment to fulfill all my renos that I'm trying to do, because I'm seeing the opportunity of spending a little bit of money before inflation adds higher to that. I'm trying to improve the value of my asset as well as the cash flow from that asset, because I'm going to really get a great return on investment. So if I can spend 10 grand and get an extra 150 bucks a week, 10 grand, 150 bucks a week, 7,800 per year, 7,800 over 10 grand, that's 78% return on investment, right? Why would you pay off your credit card at 20%? They're the things I look at when I go to calculate things. So just be mindful with your assets. What do you have at your disposal? What opportunities do you have to increase your cash flow? What sort of things will you need to spend in 5 years' time that you can bring that cost forward and improve upon that asset and increase greater cash flow and whatnot? There we go. Someone just said here, commercial complex, the tenant is a grocer, 10-year lease at CPI, still up at 6% next month. Exactly, right? I just sent one of my favourite properties of all time. I signed a 20-year lease with a international telecommunications giant. It's like one of the top 20 companies in the world. And they just pay me year rent in advance every year, right? And I love pushing in the CPI, right? I put it in their lease for the next year, and here's your rent pay up, right? And it's great, right? It's my favourite one. But there's lots of potential out there. The thing that I'm conscious of is businesses, right? And I've got a video, I've got some articles here that I want to read out, which will go against the thoughts on commercial properties, right? I have commercial properties. I'm very confident on commercial properties, but I don't think they're a part. I think they're very risky in these sort of times. And what I mean by that is, when I was at the Gold Coast the other day, I didn't see any shops vacant. When I went to Townsville, lots of shops vacant. When I went to Whitsundays, lots of shops vacant. When I'm here in Port Douglas, lots of shops vacant. When I was in Cairns, lots of shops vacant. There's lots of shops that are vacant because the retail economy is bad, and it's just a part of the world that we live in at the moment. So next article here says, new report to reveal the ballooning cost of ageing Australians servicing debt. So imagine now we've got all these retirees that are settling, got the baby boomers that are retiring and all that. The cost of healthcare is increasing, the need for them. The government's just got to take on more and more debt. So it says here, the Albanese government might be riding the wave of a $19 billion surplus, but the country's long-term economic future is stacking up. Australia might have just recorded a $19 billion surplus, which is not a $19 billion surplus, let me tell you that. There's a $1 trillion worth of debt that they've taken out. It goes intergenerational report to release this Thursday will show the spending pressures predominantly around health, aged care, NDIS, defence and interest payments on debt are putting the increasing pressure on the budget over the next 40 years. The 5 main spending pressures alone are projected to increase by 5.6% of GDP by 2062 by around 140 billion in today's terms, and grow from 1/3 of total Commonwealth government spending to half of the government spending by 2062. So it's going to go up significantly. I can go through it all, but I think we get the picture there. The next one is about Michael Burry. If you don't know who Michael Burry is The Big Short guy. It's a movie called The Big Short. It's the investor who accurately predicted the 2008 housing crash bets $2.5 billion on a 2023 Wall Street catastrophe. Whether this guy's right, whether he's wrong, time will tell. Common sense will prevail. I'm very confident that we will see a massive problem out there. It was only today that one of my team members sent me a snippet from the news that said 147 Domino's stores had gone bankrupt, which was the article headline. I didn't get to read through it all because I was driving through rainforests and whatnot. But what I understand and believe is through the Dominos, right? There's pressures there with the cost of these owners, right? So I think, I'm talking way out of line. I don't understand this. I don't have intricate knowledge of how they work. But from what I've heard from people out there that have been involved in Dominos and whatnot, is that the cost of wages have gone up, the cost of rent has gone up with inflation. Just as Jasper said here, you know, if you've got a 50 grand a year rent for the Domino's store and it goes up by 6% this year, that's an extra cost to the Domino's store. But from the Domino's head office, the prices are set on those pizzas, so you can only sell it for, I don't know, $10 or $15 or whatever a pizza sells for out there. So we've got costs which are ballooning the fact of what they're locked in at, and there's a imbalance here, and you've got some of the largest retailers and the largest businesses out here going bankrupt, right? And I don't know the full in-depth of it, I haven't read through the articles, but these things are happening, right? So if you see these stores go under, well then either Domino's will have to go buy back these stores, or they'll go broke, and then that's less exposure that they've got. I don't know how it will happen, but that will have another impact on the stock price. So then that stock falls, and then it's like, okay, someone's getting margin called, this is going to... So there's a flow-on effect from what's happening out there, and it's all because of a lack of liquidity that's floating around and sloshing around in that system. So it goes on to say, Michael Burry's firm, Sky Asset Management, has put a $1.6 billion US, which is 2.5 billion, on a Wall Street crash by the end of this year. It has purchased a whopping 866 million in put options against the fund tracking the S&P 500 and 739 million in put options against the NASDAQ 100 fund, right? So that's a lot of fucking money that this hedge fund has put against the market crash, right? And, you know, will it crash? Won't it crash? I think the writing's on the wall. It's inevitable that these pressures of inflation are going to impact every business. And the only way to really get through this is by printing more money and doing stimulus packages and putting more money into the system to help everybody. That means cheaper capital, cheaper rates, cheaper this, cheaper that. And with putting more pressure on that, it's only going to mean inflation's going to go up. We can see the last couple of months they have stopped increasing the interest rates. When will be the reversal? The reversal of the monetary policy will come after the crash of some financial market. We just need to wait for the financial markets to crash. I think we're on track. I was maybe 6 months too early by saying before the end of financial year. I would have expected it to happen by now. Here's a guy putting $2.5 billion on what I said would happen by the end of financial year, by the end of this year. So whether I'm 6 months too early or a day too late, I'd rather be early than a bit too late. It's even playing havoc. There's another article here about BHP has had a slump because a lack of commodities sales happening out there. Commodities, I believe, that a very, very good investment. I'd rather be buying bits of metal in the ground and stuff like that than buying, putting my money into cash or into money or whatever you want to call it, dollars. So yeah, looking at it from that perspective, China's not building, issues out there in the markets, people not buying as many cars, cancelled car orders out there, less money going through these car manufacturers, less need to go and buy steel and production and whatnot. Someone just says here, Donna just says here, that makes sense. Pizza Hut is selling other products like chicken wings to change the business. Chicken must be cheaper to sell. Load of chips and potatoes must be cheaper. Of course, like chips are a filler, potatoes are a filler. The food is not getting any better, folks, right? 20 years ago, they go, oh, you should protect the environment and eat fake meat and, you know, do your part for society. It's like, for thousands of years, nutritions have come from meat, right? I'm not trying to offend vegans or anything like that, but the ability to control that food supply, right? Just do what's worked for thousands of years. Don't do what's worked for a short period of time where people are being sold plastic food and fake meat and fake everything. And the stuff that these big retail outlets are selling, I choose not to go there because of that. Hey Felice, how you going, big boy? Meat tax coming, yes, it's a part of your climate sector here. So here's another article here. Australia's economy to more than double in growth, but aging population will slow the growth. Millennials will be a major contributor to economic slowdown, projected by a highly anticipated report into the long-term state of the budget. So now you've got this Jim Chalmers guy, the treasurer, that's out today, talking around, talking up one part of the market, but also setting the phase for where the crash is going to come from. It's interesting. Here's another article from Jim Chalmers. No plans to change the GST despite calls for it to be raised. Well, if there's no need for it, well, why are we talking about it, right? So talking about increasing taxes, right? Here's another way of taxing everybody, trying to fulfill their obligations, right? These states are bankrupt. The federal government is bankrupt. The only way they've got to get themselves out of this is to print more money. How do they print more money? They print more bonds. What's the benefit of that? They get through servicing their debt. We ending up in a position like the US is in at the moment. Everyone always says if the US catches sneezes, Australia will catch a cold. Well, financially, the US is, coughing up blood, right? It's a matter of what's going to happen to us in the future. And I think we can look at, places like this, which will have a big impact on all our lives. So why are we talking about GST? He goes, Jim Chalmers says a call for Australians to be slapped with an increase in the goods and services tax in the midst of a cost of living crisis are being promptly rejected. He slammed the door shut on the proposal from the Business Council of Australia, including the group's Seize the Moment report. We don't have any plans to change. He's just trying to make himself look good for the next election. But why are you talking about increasing the GST, right? The GST was to get rid of the sales tax, but we've got the GST, we've got payroll tax, we've got land tax, we've got stamp duties, we've got this, we've got that, we've got Medicare levies. They're trying to fuck us in every single way. It's crazy. This one here is a very important one. So last year we heard of Evergrande. I called it Evergrande because it was a time bomb in the Chinese economy. Evergrande, which was China's largest developer, went bust last year. And there's another one which is called Country Garden. It's a development company in China, and it sounds a lot like some of these ones in Australia with the building defects and the builders going broke every day. But these are massive companies, right? It goes on to read, a massive collapse in China is sending economic shockwaves around the world, including Australia, where the dollar has been hit even further and the share market has dropped. Shares in Chinese property giant Country Garden plunged on Monday after it missed bond payments and warned of multi-billion-dollar losses, deepening concerns over the nation's heavily indebted real estate sector. This debt is so big, the banks will go broke, right? The builders are going broke. The developers are going broke. The countries are going broke. The states are going broke. It's insane, right? It's insane. So if China has an issue there because they've had a big Ponzi scheme, or they're not going to be buying as much steel and stuff like that, but that'll eventually get turned back around. They'll print out some money. They'll get more bonds flying. If you just look at the really fine print, it skims over this almost, right? It goes on to say, shares in the Chinese property giant plunged on Monday after it missed bond payments, right? They can't pay their bonds because they don't have the liquidity, right? Remembering the bond market, the 3 months, the 2 year, the 5 year, the 10 year, the 30-year bonds, there's a lack of liquidity in there. And that is what's causing everything to seize up. And that will be the catalyst for us to change course of monetary policy and us to have to print more money, and which will cause even greater levels of inflation, meaning that all of your assets will go up, meaning that everything you're going to buy is going to go up, meaning that everything that we touch is going to go up, and we're going to see high level. If you think we're in bad level of inflation at the moment, fast forward 2 years, your money today, if you have 100 grand in the bank, will never buy you as much as it will today, right? If you think back last year or 2 years or 3 years ago when the world turned to shit and everyone got locked in their house, right? Everyone's like, oh, it's going to crash, let's get the cash. Everyone was so scared. Those poor bastards that didn't take decisions, made the wrong decisions, tried to sell something to get out the cash, their cash don't buy them what it used to buy them, right? And you think that 2 years is going to be better. Your money today will never buy what it can today. We saw that chart beforehand, and I will go back to it. And I will open it because it is a really, it changed. It was like the penny dropped moment for me, right? It's this chart here, which I've got my ring light reflecting on my laptop screen. You can see it, that is inflation, right? In the 1960s, it was sort of flatlined, and we get to 1971. I'm assuming this is 1971. Oh, what a guess, right? When it started to take off, that's when our dollar turned to the US petrodollar, right? And then we had the recession in the early 1990s, and it jigger-jaggered along there for a little bit, and then it took off even further. So each time we have a problem, it's going up higher and higher. But now, if we zoom right in, we'll see that it's going hockey stick. You can't recover. Tell me any chart that has recovered from a hockey stick up or a crash which is heading down, right? It just doesn't happen. So that's just my thoughts on that front. If anything, you want to increase your asset base, increase your cash flows, wherever you can increase your cash flows. Think about the next step. That's why I'm out renovating my properties so I can get, my trades done now cheaper, my tiles cheaper, my parts that I need cheaper, because inflation, the next wave, the second wave of inflation, right, just takes 2 weeks to flatten the curve, folks. 2 weeks. That's all you need to be locked down for. But here we are 3 years later, and the world is crazy. No one looked at the ramifications, right? You turn the wheel this way, this happens. You turn the wheel that way, that happens, right? Where is the steering wheel turning that we have at the moment? And inflation is going to go off the charts. I'm so happy by it. It's not going to be pretty for me, for you, for anybody, but there's certainly different ways to protect yourself. Having cash flow that gets increased, assets that get increased are going to be certainly a better way of protecting yourself, and certainly a way to save your capital. Having cash in the bank is not a good thing to be having. But I'm not your financial advisor, none of this is financial advice. And if you're watching from one of the regulatory bodies, come and talk to us and speak to our legal, because we're not giving financial advice. We're just sharing things on the internet and reading out news articles and giving our thoughts on that. Some more on China. China will stop publishing data on youth unemployment as the crisis hits a tipping point. The other week we talked about it, and we said that 46%, I think it was, of Chinese youth under 25 are unemployed, right? And it says here Tuesday's data added a slew of disappointing figures in recent months, reflecting a slump in China's post illness with the C and those things that I never said. You guys got to respect the fact that I've never once said the word, not to this date. I've never once said the word with the numbers at the end of it starting with the C, and it sounds like AIDS and whatever. It says here the jobless among the 16 to 24-year-olds are hitting a record number. The country has slipped into deflation for the first time in more than 2 years in July due to waning consumption and flagging exports. Why is there a flagging export out there? Because no one has money. There's no capital floating around because the cost of getting capital has gone up so high, which is startling. You would never have predicted this now, would you? No one would have. Goes here, the youth unemployment was rated to tip a staggering 46.5% this year, with young people forced to become full-time kids. Let's put it back to the government, eh? Bigger Ponzi scheme on top of a bigger Ponzi scheme. Here we go. First Republic shares plunged 50%. Right, this is a bank, a US bank. US bank has plunged 50% after customers yanked $150 billion in deposits. it's a bit old news, but it's where we're at. Just seen here, Maddie said the US will be removed as the world reserve currency in time. I said that if we look at things that have happened, right? If you go back through the last few crashes that we had, the early 2000s dot-com bubble, there was a few bad actors, a few businesses went bust, that was it. Then going back into 2008, we had a few banks going bust, we had a few countries getting themselves into money troubles, a few currencies that we've lost. After 2008, how many countries lost their currency, right? Greece, Venezuela, Turkey. There's a few that are losing their currencies as we speak. This time we're having a financial crisis. We're seeing countries go bankrupt. We're seeing the currencies go bankrupt. It's getting bigger and bigger. And when the US goes bankrupt, the US dollar will disappear. We had the central banks last time bail out the big banks, and now the big banks are going broke, and now we're seeing the central banks starting to get themselves into money trouble. And my thought is that we're going to have a thing called a SDR, which is a special drawing right, which is a pool of currency once all these currencies collapse. And we will see the IMF step in with the International Monetary Fund will step in and have to bail out some of these central banks and buy up their bonds. Right, and it's the BIS, the Bank of International Settlements. These larger than the central banks, will come and just gobble up these smaller central banks, and it's going to be get popcorn out, because this decade is going to be fun. It already is fun. I said it was going to be fun before we went into the 2020s, right? And here we are, different excuses, different reasons, but we've still got massive problems. We've got George here saying Lebanon. Doesn't matter if you're in Lebanon, doesn't matter if you're in Turkey, doesn't matter if you're in Greece, doesn't matter if you're in Venezuela, doesn't matter if you're in South Africa, doesn't matter if you're in Australia, right? We're on our way, right? These things we might have said, oh, their economy was shit many years ago, or it's from corruption or whatever. You don't think that your country's doing corruption? Think again, folks. Think again. Here we are. The US averts its first ever default as Congress passed debt. We've talked about that one beforehand. Someone's given me that today, which was when they took away the ceiling, right? And if we look at the US debt, it was $31.6 trillion worth of debt. And I think now it's up to about $33 trillion worth of debt in a matter of like 2 months, right? It's gone up by $1 trillion in like a month, right? It took us 200 years to get $31 trillion worth of debt in the US, and it's taken a month to get $1 trillion, right? Imagine what a year, if we could get a year of $10 trillion worth of increase to their debt. They're now using the credit card to pay the interest bill, and that's all the countries are doing, is using a big credit card. It's called bonds, and they're different financial instruments, but in layman's terms, it's a big credit card. They're using that credit card to pay the interest rate, right? And as the rates are going up, these things are quickly going broke and further broke. So, interesting. And just once again to, everyone's beloved commercial properties out there. So I've got a message here. Digital currencies, they can control us 100%. That's what it is. And then, hey dude, the government want to hyperinflate to pay off their debt with peanuts. Exactly, right? Let's assume you're one of these builders. Let's assume you're one of these companies that are on the news, that have gone broke and gone into liquidation. If you were going into liquidation, you would rack up as much debt as you can, get as many assets as you can. What the central banks are doing, what the big corporations are doing, what the governments are doing, is that they know, it's a trick of the rich, right? Is that they will hyperinflate the currency to devalue the money and devalue the debt. And they can pay off their debt very easily with the devalued currency and get back to a position of where they want to be. So this is a trick and a tool of the powerful and the elites and the controlling powers. You guys can play at that. If it wasn't for these evil people creating this bad system that worked for them, we wouldn't have a table to play at. So I remember saying that on a podcast with George once. We're talking about if we were gold back to our currency, would that be good? And I was like, the gold would improve our currency and it would be a very good thing to do. But properties didn't go up when we had a gold standard. They've gone up without the gold standard because the dollar got devalued and the currency has been crashing slowly over the last 52 years. The 15th of August, let's do a a happy birthday, happy anniversary to the petrodollar. 1971, the 15th of August, 1971. So it was only a week ago. Let's play tribute to the fact. I wish I had like a trumpet to play for some tribute to it, and a minute's silence for the fact that the petrodollar has been a complete fiat currency, which is just based on nothing, for a period of 52 years, and it's to be the base currency of the world. The longest currencies to exist have been about 30 years in general, and they've all crashed after about 32, 33, 34 years in existence. Our Aussie dollar, which is based off the back of the US dollar, which US dollar is the base currency, came into existence in 1971. So our dollar might have been called a dollar beforehand or whatever, but in its current format, it has been able to survive longer than any of the other currencies out there. But like all the other currencies, they all die and go to nothing via hyperinflation. And that is where we are heading right now. So, just to go on to my next and final article here, is that WeWork, this goes on to say, company WeWork may not survive, right? That big corporate rental company may not survive as the share price has dropped 97%, right? 97. Imagine how many bodgy companies and bodgy deals are out there, bodgy contracts to get these companies to their valuations. And I think about it, and I think, imagine if, what is a powerful thing, right? You're using the stock market. This is something really deep, right? I always have these deep thoughts. But if you, let's say that you're a shareholder in, I don't know, Dominos was in the news today, 147 companies gone bankrupt or whatever. I don't know too much, so I'm not going to comment on that. Just say you're Dominos. Let's say that you're any large ASX listed company, right? Imagine doing an off-balance sheet transaction. This is just a random one, right? This is just for your beloved commercial properties out there. If you were to be, I don't know, the CEO or the CEO's kid or the CEO's spouse or someone that knows about the stock or someone that's been at the pub with the person from the company, they're going to open 20 more stores. You could go and buy the real estate that the store is going to be placed in, right? It's got no tenant. You put the tenant in there, and then suddenly the value of that lease is locked, and you've got a trusted ASX listed company or whatever in there, and then that property doubles and quadruples in value, but you've got a company which is a time bomb over here, rented and stuck into a lease, which added the value, but without that tenant, it wouldn't be worth anything, right? There's so many deals that are done, up and down, parallel, horizontal, vertical, whatever way you want to look at, which are so many different deals that are stacked on top of deals here. And this financial system, as we saw from our previous article, Michael Burry has put $2.5 billion worth of bets on the stock markets around the world crashing, right? This year in 2023. And when I say these things, people might get, I think, when I say it, people get fearful and they're like, oh, Birchie's being all doom and gloom or whatever. There's opportunity. That is the coolest part about it, is that there's opportunity within any crisis, and you should never let a good crisis go to waste, and the opportunities out there are amazing. So I guess the question that we all need to be looking at is, what opportunities can you take advantage of? What things could be a risk in your life? What things could be a risk in your business? The little ones. So if we're talking about property investing here, as a person with a job, if you have one income, if that income goes, you got no income, right? If you are forced, we've seen the last 2 years, I reckon if we look at 100% of people, 5%, maybe 10% of people are like, we're not going to obey and bow down to what the government says we have to do, and certain things that you do to your body, they didn't do it. Out of 90%, maybe 30% wanted to go and do it. And then another 50% were like, oh, I'll just do it, whatever. And then another 30%, I reckon, were forced to do it because they needed to provide for their family. And that is a big fucking issue for me, morally, thinking about the fact that people were forced and coerced into doing something to their body, right? So if you look at just the last 3 years, if you had one income, you didn't have more options, right? So if we're looking forward, if we've got inflation or whatever, what other income streams can you generate? Could you set up a business? Could you set up a side gig? Could you do something that's going to build an extra income stream? But selling more of your time, and you've got 24 hours in the day and you sell 8 of them in your job, and you go and sell another 8 of them working a second job, you're just losing your lifestyle. So what other things can you do? Understand how money works, understand how the system works, build a business, build a product, do something. You've got the internet, you've got whatever. You go buy assets, you can buy shares if you want. I'm not invested in the paper assets. You can buy other type of financial instruments, which are very good out there. You could do something on crypto, right? I'm not advocating crypto, I'm just saying. For me, I like the fundamentals of a property, and it takes human labor to go and build a property. If you can buy a property for 200 grand, which costs more than 200 grand to build it, if it's bringing in a cash flow that's positive, that goes up with inflation, all those things, that's what I like with that. If you are an investor with property at the moment, look at how can you increase your cash flow, right? If you've got 10 properties and you can increase rent $50 a week, there's $500 a week better off. Happy days, right? If you've got investing, you've got 10 properties and you can push it up by $50 a week, so $500 a week, you're getting better off. But then you could go and do a renovation and spend maybe 50 grand, and you've got a bit of equity over there, you can pull the equity, whatever, spend the 50K and you get $100 a week extra. Well, now you're getting, $1,000 a week, 50 grand a year, right? So what things do you have in your disposal or vicinity that you can leverage? If you have a business, what things could you do with your business? When was the last time you reviewed your business? When was the last time you're like, okay, should I be employing more staff? Should I be sacking staff? Should I be getting a smaller office space? Do I really need to be operating the same way that I used to? Is it something I can do to change? Are my prices in line with my competitors? Is there any government grants out there? Is there any things that can help me do things to my businesses? Just the other day, I got a nice grant, right? Just got a nice grant, right? And it was fantastic, right? It was like literally, I won't even go into details of it, but it was very like, I'll go and buy a new motel tomorrow, right? Type thing. It was a grant based on improving my property. So I can go and renovate my properties, and I'm getting paid from the government to improve those properties. And by doing so will help me reduce some energy costs. By doing so will help improve my cash flow. That will improve the aesthetics and feel of the property. What sort of things are around your business? Is there grants you could be getting for your business? When was the last time you looked at that? Is there things that you could be doing before inflation hits, right? Labor is going to go through the roof when inflation hits. The cost of your tiles is going to go up, right? If you want to look at what caused all the builders to go broke, there's probably a lot of mismanagement there, but inflation was a very important part, right? Like the cost of timber gone through the roof, cost of trades has gone through the roof. What's going to happen when inflation creeps up? If you do your renovations in the future, it's going to be a lot more expensive. So, and it may not be that you should be doing a renovation. It might mean that you should be buying more property today. It might be that you should be selling off a property. But they're the things you should be questioning is, what can I do to improve my position and get me closer to my goals and minimize risk? Because it's like every 6 months there's a change happening, right? The control puppet masters turn the steering wheel to the right, they turn it to the left. What is the outcome when you turn to either of these directions? And we're entering into a phase now where it's very bumpy road, just like me driving through the Daintree rainforest today, right? Bumpy, bumpy, bumpy. I had 3 packets of tiles in the back of my car, and they were bouncing around, right? Like boom, boom. That's the road that we're driving in economically at the moment, and people don't know what's laying around the corner for them. And I think it's important to sort of plan, prognosticate, and sort of work out a plan A, a plan B, a plan C of what options have you got. As I said at the start of this, it's not all doom and gloom, right? I picture that we'll see financial markets crash. If that happens, then your super fund could be impacted. Your paper assets could be impacted. If there's a chance, let's say that there's a chance of rain today, right? Would you go and wash your car? If there's a chance of a fire, are you going to trim down all the dead bush and light a little fire in your backyard, right? There's a high chance of a risk to be surrounding you. So if there was the chance of, let's say, a stock market going up in value, a chance of the stock market going down, doing nothing, or a chance of the stock market going down in value, if there was a 90% chance that it would go do nothing, or a 90% chance of it going down in value, and a 10% chance of it going up, would that be a time where you'd go and sit back and consider, am I best to buy into that because it's got a higher risk of it going down? You need to reassess your position. So if there was a stock market crash, there would be massive financial stimulus packages to come behind that, which you would be able to benefit from, which will help out from your cash flow. But it would also hurt you from inflation, right? And if I was to put my bets on anything, I did put my bets on things, and I did think that they would drop by the end of financial year. However, it didn't drop by the end of the financial year, and we didn't see that crash yet. We've got Michael Burry out there now saying $2.5 billion worth of a bet that the stock market will crash. Well, you've got to be sitting there thinking, well, maybe there's a lot of money that's flowing to these things, and these people have a lot of research, knowledge, and foresight. What would happen, right? We saw last time the stock market crashed, last time there was a catastrophe, they just printed lots of money, they lowered the cost of interest rates, and we had massive inflation. So they're the things we need to play in. I see that a few of you guys are saying that you can't hear the audio or whatever. I'm seeing people saying that they can hear the audio. Apologies. Stephen said here, Brick Summit is starting today. If we were to see some very funny business to occur, it would be around now, right? Because BRICS, which is the new trade route, which is Russia and China and India, that are joining forces to be able to exchange trade by cutting out the US dollar, that would help crash the US dollar further and further and further. So, yeah. Someone says, fuck man, you're still on holidays. Life's a holiday, but yeah, I'm still traveling around. I'll probably be back in a couple of weeks. It has not been a holiday. Let me tell you that I've driven more than 7,000 kilometers. I haven't been able to check my emails for 2 weeks. I can't even explain how busy I've been. I've been hustling deals and making deals happen for my investors more than ever. Not on holidays, just a different location, and that's what life is all about. So, yeah. But anyway, I've got to go eat some food. I am so wrecked. I need to get on my emails. I can see I've got a few deals for my investors that I need to send out. I've just got today whilst I've been on the road. So yeah, I'm going to leave that as a wrap up for tonight. If you guys are a bit unsure of where to for your portfolio, what options you've got, whether it be, can you increase your rent? Can you restructure your debt? Can you buy more properties? Should you buy more properties? Should you be selling properties? Whatever that may look like for you. If you need help on working out what is the best step for your super fund, because I think there's a massive amount of risk for people with their super funds, and I'm no financial advisor. I can't give you that financial advice. I don't like giving financial advice that I shouldn't be giving financial advice on when it comes to self-managed super funds. But if you do have a super fund, I'd be very concerned about what could potentially happen to that in the coming future with volatility in these financial markets. Because let me tell you, people that had money in the super fund in 2020, even if it's still worth what it was in 2020 or even a little bit more than what it was worth, you've gone way far backwards than what it really looks like there. So reach out to my team. There's a little link on the side where you can book in a chat with one of my team members. You can always contact us 1300 367 925. Email us at admin@B.Invested.com.au. We're all here to help you. We've seen more people, doing cool things in 2023 than any other year. I think it's our 14th year in business this year, which is really, really cool to see. Taking those people that have the same views, the same visions, the same goals, educating them and helping them and getting them through the financial reset or the financial catastrophe that we're in, and taking advantage of it. There's lots of people that are benefiting, right? If there was a crash and everyone went bankrupt or something went wrong, whatever the case may be, you've got to remember that there's still the same amount of people that start off with, and there's still the same amount of assets that were out there to start off with. So it's just purely a redistribution of that wealth. money going from one hand into another person's hand. You want to be the one with the strong hand. You want to be taking from the weak hand. And it's only the knowledge, the application, and your commitment to be able to make that happen that will get you there to the other side. And that's what the B.Invested community does, is push forward and takes advantage of those opportunities. So if you want to help, reach out to us. If not, thanks a lot for watching. If you're a hater, write your hateful comments. If you enjoy what we do, smash up the like, share it with your friends and family. Thanks a lot for watching. We'll catch up shortly. Have a great week. Bye for now.